Okay, hello and welcome everybody to the Global Energy Outlook Forum. I'm delighted to be kicking off the Americas session here of our 12-hour round the world forum. We've started, of course, in Asia this morning, here in Dubai at least, moved to the Middle East, through Europe, and now we have landed in the United States. And I'm delighted to welcome Dr. Edward Morse, Senior Advisor and Commodities Strategist at Hartree Partners, who's going to be starting off our America section with a feature interview with Dr. Morse. And thanks so much for joining us today to talk about the outlook, your outlook for global oil markets in the year ahead.
Should be with you.
Great to be with you. Ed, let's look at, in the immediate sense, let's start with the elephant in the room, which is that you're going to have in America a new president taking power in a week or two. We have felt, at least the rest of the world, that he's already there in terms of the impact he's having with what he's planning with the new administration. But let's focus on the energy markets and start by asking you whether you think that a Trump 2.0 presidency is going to impact global oil economics and dynamics.
It could very well, and it could be a phenomenal impact, depending what Mr. Trump actually decides what to do. And let me give you a perfect example of it. We've had Trump saying that his objectives are to reduce American energy costs by 50%, and at the same time to raise tariffs around the world. He's also said he wants to bring Iran to its knees, to drop Iranian exports by 500,000 barrels a day by the end of the second quarter. And according to his team and people I've spoken there, to drop it by 1 million barrels a day by the beginning of the fourth quarter if they don't come to an agreement on a variety of matters. Now, those are self-contradictory, and they're all impactful depending on how things go. And I can add Russia-Ukraine. I can add what he wants to do with border issues with Canada and Mexico. Tariffs raise energy costs to Americans. It's hard to imagine how you do that, how you fight Iran and reduce costs to American citizens. So we don't know. And that means volatility in the year ahead.
Okay, I mean, I'd like to touch on the Iran thing again, because we've had a lot of commenters today saying that that is going to be the critical question mark in terms of Trump's foreign policy. Others have said he wants to keep it peaceful on the international front so he can focus on domestic issues, a domestic policy that would include Iran, presumably. And at the same time, as you said, he's threatened more sanctions and to be a little bit more hawkish on that front. If there is more stringent activity on Iran in terms of more sanctions, actually limiting their oil exports, which have had a reprieve really in the last year or two, what impact do you think that would actually have on fundamentals in the oil market, given that we're so well supplied, aren't we?
We're remarkably well supplied, and there's also a significant amount of spare capacity in the world, and there's growth prospects ahead for supply, which, in my eyes and the eyes of many people, are greater than the demand that we expect this year and next year. So, I think other people think there might be an imbalance leading to lower prices, all else equals, but all else really isn't equal, and there are interveners in the market, direct interveners in the market. So let's look at Iran and let's look at OPEC Plus and the leaders of OPEC Plus and what their attitude might be if the U.S., let's say, puts 1 million barrels a day of sanctions on Iran. Do they come rushing in to fill that 1 million barrel a day gap? Or do they say, whoa, wait a second, we don't know what Trump's ultimate game is. We want to keep the market less volatile than it has been. We need to add more oil to the market, but will we replace 1 million barrels a day? Absolutely not, because that's too dangerous. What do we do if Trump and Iran have an agreement? So just looking at OPEC Plus with its power to restrain supply in the markets, what do they do when they want to, keep oil prices in a band? Maybe the band is, let's say, 70 to 90, $95 Brent. But you cannot easily respond to sanctions imposed on Iran without thinking what happens when they go off and what is the position you're in. Certainly, there'll be rebellion among OPEC Plus countries who say, wait a second, we put oil back in the market, we want to keep it there. We're not going to take it off again. So that's the kind of uneven balance that we have, and the uncertainties about, you take the oil market off, take the oil off from Iran. There is oil available to replace it, but will it be there, in fact?
Well, that's really interesting. That cautious approach you say they could take if that does transpire. And you mentioned that there's a lot of, within OPEC plus, a lot of countries that obviously want to export more. Countries like the UAE, who've been ramping up their capacity and have, again, voluntarily agreed not to place that extra oil on the market. I mean, just sticking with OPEC plus just for one more minute, do you think that given the bearish outlook, they can continue as a group to manage the market balance, as they have done very well, admittedly, as many would say, in terms of sacrificing market share to producers like the US and others?
Oh, you caught me in a little bit of a personal embarrassment in a way, in that I have written, I believe, 14 articles published here and there, starting maybe 30 years ago, that have some variation of the title of "Is this the end of OPEC?" question mark. And
Ah,
and now we're confronting that same issue. So it's hard to keep together a group of countries that have different attitudes toward where their fiscal break-even prices. We have where you're sitting in the UAE, a country that has managed as an oil producing country to diversify its economy in what may be, from a 30,000 foot perspective, simply magical that a country totally dependent on oil revenues could have done what the UAE has done. Not everyone is in that position. Some countries have a fiscal break even of 150 or
yeah,
$200. Some, like Saudi Arabia, it's not clear what it is, but it's in a range that's higher than current prices, and it may be well above $100 a barrel. The Saudis have a record of trying to make sure that anybody who tries to compete with them internationally, who actually needs higher prices, they can bring the price down to punish that party and to bring prices back to a level that the overproducing countries had been at. They'd done this to Russia for a while, including in 2013-14. They tried it against the US in 2013-14. They thought that in both cases, the countries needed a very high price. They needed a low price, $80, $90 for Russia, and the US 20 or 5, depending on how you look at it, for them.
yeah.
And those efforts failed. It failed in the case of Russia because they didn't think about the consequences of a floating exchange rate, where the ruble could adjust the cost of production to Russia. The ruble depreciates. Most of the costs are in rubles, and they can adjust to that and start investing again. In the US, they wildly underestimated the technological revolution that's associated with the shale revolution, and they're at that point again. And we got to look back,
Mm.
maybe. Saudi production capacity is not very different now from what it was in 1980, and from 1980 to now, the world has not quite doubled its oversupply, but overall supply, but it's gone from a 60 million barrel a day market to a 105 million barrel a day market. And OPEC countries together are in the 24 million barrel a day range. They haven't changed. They were at 24 million barrels a day, a major force in the market, and at 105 million barrels a day, they're not that kind of major force. So, their dilemma is how to do that, and it's a risky proposition for them.
Yeah.
They now confront something they never have confronted before, and that is that they're no longer the superpower. Who is the largest oil exporting country in the world? It's the United States.
Well, let
The
me
U.S. Yeah.
let's take you up on that point, because I did want to talk about the US as well, in that sense, as you said, largest oil exporter, largest gas, also LNG exporter, which will actually, the next interview we're going to be touching on that as well, hopefully talking about gas in the US. But what, so does the US, is there a challenge at all for the US to maintain that position? It has achieved that, but for example, infrastructurally, can it continue on that trajectory to keep that sort of top tier position, if you like? It will, of course, as a single country, be keep that at 13 million barrels, but we've had different points of view as to whether it's going to blip beyond that in the medium term future? Do you see that happening?
It really depends on who's in power. So I think this is an explicit area where Trump 2.0 means a lot on the ground. You talk about infrastructure. I don't think there's a critical infrastructure problem on the immediate horizon, not in 2025, not in 2026, maybe starting in late 27, 2028. There could be an infrastructure problem. Now, here's where several things make a difference. Ever since we've had offshore leasing, you take any 5-year period, there have been the fewest number of lease sales in any 5-year period has been 11. The most has been 16. On average, it's been 13 or 14 lease sales to bring land available to companies to explore for and produce oil. Biden administration in 2022 passed a new law that it was a compromise where they decided to have three lease sales over a 5-year period of time. That begins in 2025, but between 25 and 5 years from them, only 3 lease sales. And they've restricted where the lease sales can begin. So they've eliminated, 80% of the oil mass around the country in water. What can Trump now do about that? He can't do much about the restrictions on the East Coast and the West Coast of the US. And Biden left free the offshore of Texas, Louisiana, Alabama, and Mississippi. And Trump can go back to 4 lease sales a year. And that can make a very big difference between now and the end of a 4-year Trump term. Similarly, Alaska, where there had been 2 million barrels a day of infrastructure on the export side and multiple tens of tons of LNG exports, the production of both gas and oil has fallen. They're now producing around 500,000 barrels a day. Biden took the wildlife preserve of Alaska and cut it in half. And then he allowed one company, ConocoPhillips, to have a license to explore. Trump can overnight change that rule for Alaska. And Alaska is not New York and it's not California. It's a state that depends on fossil fuel exports and where it's popular to export. So, it makes a significant difference who's the president in trying to think about where the U.S. goes.
Okay, well then let's see what happens in the next few months. I do want to touch on demand, Ed, also before global demand, before we end our time together. There's the survey question: what will be the greatest development in the U.S. oil industry this year to impact global oil prices? Is it the expansion of export infrastructure? Is it the production levels and their influence on supply as it stands? Policy shifts under the new administration you just referenced, or advancements in clean energy technologies and CCS. We may have time to touch on the transition, but I just wanted to get your opinion also on obviously the other side of the equation, which is demand and just China. Give us your take on how significant do you think is the fact that China is now at the best at 5% GDP growth going forward, and also as it transitions into more service oriented economy, EV adoption, etc. A concern for oil producers such as the US or those in the Gulf?
You did a lot of complicated questions, and I have opinions on all of them, and we don't have time to go into them.
But China, will
well,
China be more of a concern as a demand center than it has been going forward?
Yeah, it already is. So, for all practical purposes, overall demand in China for fossil fuels has peaked. And maybe not so much on the gas side, but certainly on the oil side. And whether it's peaked last year, the year before, or 2 years from now, it doesn't really matter. We've had peak demand reached for oil in the United States, in Europe, in Japan, in Korea, and now in China. And I know it's controversial, but if you take the period of the last 75 years, the oil intensity of GDP around the world was very high. For every 1% increase in GDP, there was more than a 1% increase in oil demand. China had that for a 20-year period of time, 11, 12% GDP growth and 12, 13, 14% oil demand growth. And now we have a GDP number that's a fictitious number. It is a made-up number. Nobody who calculates GDP in the Western world understands how China calculates GDP. It's a political number. It's not a real number. Real GDP, as a senior official with a PhD in macroeconomics has told me, that you look at it all and 5%, maybe 2.5% GDP growth. But the real issue for exporters of oil is the dilemma of what happens when the world now is not at 1.1% oil demand growth per every 1% of GDP, but we are now actually in a world that for every 1% increase in GDP, there's a 0.3% increase in oil demand. And it's falling more rapidly because of the energy transition and policy in play. So that is the dilemma for OPEC plus countries. What do you do when structurally oil demand is really at its peak level? OPEC, in a way, hit from this also by being able to basically manipulate the OPEC Secretariat's view of demand, overstating it by 1 million barrels a day last year. So, they ought to come to reality and not have fake numbers in their own reports.
Yeah, and we may see those numbers change this year. As you said, there was a bit of divergence there. Dr. Edward Morse, I'm afraid we've run out of time, but it would be great to have your insights. I would like to invite you to stay on the link here, but I would ask you to switch off your camera. We're going to move on to the second feature interview of this particular session. So if you could switch off your video, but you can remain there to listen in, and we will now introduce our next guest. Thank you so much, Ed Morse. Thanks so much for that. I'm delighted to be joined by Mr. Martin Houston, executive chairman, former executive chairman, I should say, of Tellurian. Martin, thanks so much for joining us today. We'll be talking about US natural gas production and LNG exports specifically, and looking forward to your take on that.
Thank you. Good morning. Good afternoon to you.
Good afternoon. We're on different time schedules in today's forum. Everybody is. Great to have you with us. Well, let's just, and again, let's look forward a bit. We know where the US has got to with its very ambitious trajectory of US natural gas production and particularly LNG exports. Now the world's largest exporter of LNG, supplying approximately a quarter of global gas around the world. I'd like to get your take on how global demand dynamics looking forward are going to support that if the US continues on this ambitious trajectory. Short-term demand is there, but are we risking oversupply given the US's ambitious plans?
Well, Diala, I don't think so. I mean, I'm well known as a bull on gas, so it won't be surprising to hear me say something to the contrary. I mean, I think there are some really very bullish statistics out there in terms of how much gas demand could grow. I mean, let's just give you one view. I mean, there's a view that gas demand could grow by as much as 75% by 2050, which is a staggering amount of growth, driven, of course, by demand, driven principally by Asia and principally by demand for power. That could be 700 BCF a day by 2050. And if I just, take a couple more seconds to say that and translate that into LNG demand, I mean, at the outer end of estimates I've seen, that could be 1,200 million tons per annum, 50% of which could be consumed in Asia. So, I think you'll agree that those are pretty big numbers. And the notion that we are somehow heading for oversupply or, softness in the market, I'm afraid just doesn't wash with me.
Okay, well, I mean, let's talk a bit about that Asian demand. Let's touch on China, because we can't have a conversation about energy demand without that. And would you say that the softening on the macro front of the Chinese economy, albeit it's still running strongly, but it's softened, do you think that is a dynamic that LNG suppliers should be concerned about going forward? Adjusting their plans?
I think China is a key participant in these numbers. Not the only participant by any means. I mean, we should consider the whole of Southeast Asia really as being a big demand growth center. But China is, one of the risks, I think, to, some of the very big gas demand growth that, could be imagined. And the other thing, of course, is price. Yeah. A lot of the markets we are talking about are very price sensitive. And I could mention particularly India, Pakistan, Bangladesh, where, at a price, LNG will not sell. But, as long as there is supply at a reasonable price, I mean, that demand will grow. So I think those are the two issues I think that could attenuate the growth, price and China. And it's very hard to predict both.
Okay, I mean that as you said, there are very price sensitive countries, particularly in Southeast Asia. There has been a lot of volatility in energy pricing in the last, let's say, 5 years. I mean, that's a long period, but we've seen real peaks and troughs there, haven't we? Determined by various factors. But now with the sort of security of supply that we see going ahead with the US establishing its position, do you think that volatility will quieten down going forward? Could we see volatility in pricing with all this abundant supply coming through?
Look, I think volatility is here to stay. And I think if we all look back in our careers at the number of price events that we've seen in the energy markets, I mean, volatility will always be there. Will it be as deep as the two sort of generational events that we've had in the last few years? Who knows? But it's easy to imagine that you're in a period of quiescence and that somehow everything is you're going to stay static for a long period of time. That just is not the case. One thing we have to remember is that we've had some very warm winters globally since the beginning of the Ukraine-Russia war, and that has given people, I think, a false sense of security in terms of short-run pricing. So, I'm afraid, it just takes a big freeze. Now, we're in a big freeze right now in America. I'm in Texas and it's below freezing outside. If that were, a global event, it would have a big impact on prices. And yes, it would, drive volatility as we've seen in the past.
Yeah, Martin, I'd like to touch on, policy a little bit. We have a new administration literally about to take over with Trump. He's been very clear about where his energy sort of policy lies in terms of licensing, drill, baby, drill, et cetera, et cetera. Do you expect that we will see what we've heard from him? And is that going to be really very different from the Biden administration's policy effectively? Because Biden's talked the talk a lot, but he hasn't really implemented, some real restrictions in terms of new drilling rights, except for the pause that we saw in LNG exports, etc. But in reality, that doesn't seem to have, slowed that train down.
Well, look, I think there's a couple of things here. I mean, first of all, let's talk about Mr. Trump. I mean, my personal view, and it's only that, is that his bark is worse than his bite. My sense is that President Trump will be looking for, thinking about his legacy beyond his presidency. This is his last term. And I think that means that we will see some moderated behavior. But I do think it is good for the economy, and it's certainly good for our energy business. In terms of the Biden administration, we had the LNG pause. You will have noticed yesterday there was a ban on certain areas for offshore drilling, which was put in place, which will be very hard for the Trump administration to reverse. So he has had I think, a very detrimental impact actually on our industry. And you will have noticed that the Energy Secretary, Jennifer Granholm, put out a report in December about the pause, and in her letter outlining 5 reasons why she thought that people should consider very deeply before lifting the pause. I mean, I have some views on that letter, which some of which aren't worth printing, but it was a cause, looking for a report, in my view. And I think some of the arguments were completely fallacious. Now, I do expect that to be tackled by the Trump administration. Question is how quickly and how effectively that can be done. You will have seen again 1 or 2 news items around offshore US LNG in the past 24 hours or so. So, there is some movement, and my expectation is that the landscape will change in terms of the energy outlook in the United States.
Okay, but how does a new administration, albeit a Trump one, that's made its intentions quite clear, how do they balance that ambitious sort of agenda with the concerns that many in the US have about obviously the sustainability from a clean point of view of keeping things under control. Is that going to be a concern, do you think, from a policy point of view?
I think well, first of all, we have a new energy secretary, a very sensible man, and somebody who's deeply been involved in this business in his career. I think that will make a big change to the outlook for energy in the United States. I'm not so sure that the energy companies are looking for this drill, baby, drill. I think the energy companies are looking for a sensible debate around the longevity of hydrocarbons and the support that the hydrocarbon industry gets. I mean, as we all know, hydrocarbons have a long run future in balancing the growth of renewables over a long period of time, particularly natural gas. That has been difficult for governments, particularly in the G20, to say. It is reality, but it's been difficult for governments with their electorates vocal views to say that. And I believe that is really what the industry is looking for, a sense that they will be treated fairly in the role that they play in keeping the lights on a global basis and lighting up the global south in the future. It's a balance. And my sense is that the pendulum, to your last point, around decarbonization, has swung back, I think, to a common sense debate. And that's what I'm expecting. Not so much, a wild expansion of the industry, but a very sensible approach between policy and the industry itself.
Okay, I mean, let's just touch a bit on Europe as a consumer, because of course, with the Russia-Ukraine angle kicking in now almost 3 years ago, that's been a big boon for US LNG, hasn't it? Because they sort of supplemented and have been supplementing a lot of that Russian gas, which has dropped a lot, obviously, into Europe for obvious reasons. Do you see a day, let's assume the Russia-Ukraine crisis ends in 6 months, the war is over. Do you see Europe turning back to Russian gas, or should the US feel secure that it is now taken?
I think that's a very important question. I think there are two aspects here, though, that I'd mention. First of all, there's a lot of Russian gas still flowing into Europe. Now, okay, what's happened in the Ukraine in the last 48 hours is certainly, potentially going to change that. But there's a lot of LNG flowing into Europe. You'll recall that the ban on reloadings doesn't begin until the end of the first quarter in 2025. There's still a lot of LNG flowing from Russia into a lot of ports in and around Europe. So, the notion that the gas has stopped flowing is just not true. I think necessity is the mother of invention here. I think if the gas is needed, the gas will be bought and produced. If it isn't, it won't. It's as simple as that. I mean, the lights are not going to stay off if pipeline gas remains available. I just don't think governments are in a position to make those choices on behalf of its electorate in terms of either the supply security issues or cost, which is, become one of the principal issues, I think, facing the energy quadrilemma, facing governments, facing consumers, and will be, a key issue going forward. So, that's a very wishy-washy answer to your question, but it's an answer which says that anything could happen.
Yeah. And I suppose energy security has come front and center, hasn't it? And affordability. So as long as it's competitive, LNG will remain. I'd like to just talk a little bit about competition for US LNG, Martin. Qatar having been the leader at one point, of course, Australia, and we've seen a lot of dynamics scaling back there. Going forward again in the next, let's say, a 5-10 year trajectory, and we know there's a lot of projects in the pipeline. Do you see the US holding its primary position?
I do. I think there is a lot of latency in the industry here. We've talked about the unblocking of the policy issues, and I think that will happen. I think we end up in a world in which Qatar and the United States become the two dominant suppliers. Australia has some expansion, but it's very limited. There are other geographies that are looking at LNG projects, but they're relatively small by comparison, small projects here and there. We have some in Africa, but still challenged from a security perspective. So my sense is the world is going to be living with the US, Qatar,
My hairstyle changed.
supply,
This is a pre-recorded interview.
dynamic.
It's
And
straight hair.
that's quite interesting and important. One, because Qatar sits inside the Straits of Hormuz, which represents one of the, I think, 4 or 5 key shipping areas which are problematic for the global energy trade going forward, and something that I think we should think about as a key risk for 25 and beyond. And secondly, the pricing mechanisms are different in both. So you have 2 very different commercial sets of arrangements in the United States versus Qatar, and that of course is an interesting challenge for those buyers that struggle with this notion of indexation anxiety, what to buy, how to buy it, and who to buy it from. So yeah, my sense is that is going to change the LNG dynamic, as these 2 behemoths, if you like, really take hold as being the dominant players in the market.
Okay, Martin, just one question. We talked about the indexing, etc. Can I just touch a bit on Japan? Because it's, of course, had quite an interesting LNG consumption history in recent years, especially. And of course, the nuclear power side of things is making a comeback there. Okay, it's not, admittedly, it was a much bigger LNG consumer, but going forward, do you see that being a big supporter of US LNG demand, I suppose?
I think so, yes. I mean, I think you have to look at Japan's new energy policy, and you'll see that gas is very much front and center in the in its thinking going forward. And I saw an announcement this morning that there may be talk of another LNG import terminal in Hokkaido. True or false, I don't know. But the point is that gas is very much a mainstay of the Japanese economy and will remain so. And if you go back 2 or 3 years when there was talk about e-fuels and green fuels replacing gas and LNG, that is clearly been pushed further out, A, because of cost, and B, because of availability of supply. And my sense is that Japan will remain a very key LNG buyer going into the future. And I think it has 2 big choices. It has a Henry Hub index product, and it has an oil index product. And I think it will mix and match as it sees fit. And I think buyers will choose accordingly.
Okay, and Martin, just one quick question. Let's circle back to the US again. In terms of infrastructure, I don't know if we sort of touched on it, but with all the growth in production of natural gas, can the pipeline infrastructure keep up in terms of the export mechanism, if you like? That there are some concerns about that, aren't there?
There have been in the past, and certainly under the previous administration. My sense is that is one of the things that gets unblocked. I mean, you do have a very significant difference between interstate and intrastate in terms of the ability to get things done. But my sense is infrastructure is one of the issues that the new administration will take on and ensure that what needs to get built does get built. And, this is absolutely so important with respect to power, because if you look at the US, just the US's demand for power to support AI, we're talking about somewhere around 4% today, growing to 9% by the end of the decade. I mean, that's a staggering amount of growth in power just to support one aspect of the tech industry. That's going to require a lot of infrastructure. Not all power can be built, proximal to the existing pipelines or the existing grid. So we're going to see in my view, a big expansion of both pipes and wires across North America, in the next decade.
Martin Houston, former executive chairman of Tellurian, thanks so much for joining us today. It's been great to have your insights.
My pleasure. Thank you.